Good morning, Paul Georgie from Allendale. It's October 15th, and it's Monday morning. We've got grain markets under pressure here this morning, mainly because of risk-off attitude by investors and a lack of new bullish news to feed the bulls here today. The couple of the main factors affecting things is the managed fund liquidation, and also the talk of Argentina corn coming into the U.S. We'll talk about the fundamental picture here first. The Argentina corn coming in late last week, rumors of about 1 million tons. We had talk of 1 million tons of corn coming in the week before into the North Carolina livestock feeding area, and financially, it certainly makes sense to do that compared to other prices of corn here in the U.S. Toledo, for instance, around $7.78 a bushel, and you've got corn coming out of Argentina at $7.08 a bushel. So definitely a reason to be advantageous to be bringing corn into the U.S. And if you look at the USDA supply demand, they made no adjustments for imports of corn in this last report, so you got to believe that the bottom line there will increase ending stocks on the next report if they calculate these numbers in. But the focus, I think, today is on managed money, technical liquidation. We've seen overnight the soybeans fall below the $15 area, which is the lowest price since July 5th. That area and a close below there could very easily accelerate and push this market lower as we see liquidation. The managed money positions that came out last Friday by the CFTC showed that corn, they lowered corn positions by 12,600 contracts and reduced wheat positions by 10,419 contracts. We still have got a large open interest by funds, over 260,000 contracts of corn and 177,000 contracts of soybeans. So the fear now is that we've lost the enthusiasm here on the upside from the getting new developments to push the market higher. So now we're looking at technicals, and technically we failed last week in the Dees corn. We needed a close above 768 to convince us that the seasonal bottom was in. Well, that's failed, and now we're headed toward that level again. So look for some continued pressure here unless we can find some other news to give us some support here today. Harvest should be fairly well complete. 15% left to do in corn, 20 to 25% left to do in soybeans is what trade is talking about here this morning. We do have some weather coming into the Midwest this week, which may slow harvest, but with that amount of harvest to be done, don't expect that to be a big trade factor here as we move through the week. In the livestock trade, of course, feeder cattle should see firmer prices here this morning because of the cheaper corn. We could see some strength in hogs because of that. Live cattle could see some risk-off type trading here today, so we're expecting some mix opening in the livestock. Cutout values on Friday up 36 in choice, down 28 in select. Pork cutout values were down 66 cents. So stay tuned to Allendale Research. We'll keep you informed about the technical picture here. It seems like we're doing some shifting there and focus on charts rather than fundamentals here for a period of time. So stay tuned to our Allendale Advanced Charts. We'll keep you informed the best we can. You can reach us at 800-262-7538. We wish everybody a very successful trading day, and I'll talk to you tomorrow morning. Thank you.